Hey everyone, welcome to another dividend stock investing video. I have an epic video today. I want to cover a dividend ETF that I just purchased called XYLD. This is a covered call dividend ETF that is yielding 9.8% when I look at the trailing 12 months distributions. And so I'm excited to cover that today and why it plays into my personal strategy right now. In segment 2, I have an interview with none other than Mike the investor. Mike is a friend of mine. He is an expert at crypto investing, but he also has experience with dividend stocks as well. So I have an epic interview with Mike that we filmed just this morning. You don't want to miss out. And then in segment 3 today, I want to cover some really big news with all of you about my personal life and how my strategy around life and also dividend stock investing is going to take some pretty radical turns in the coming year. So get ready, everyone, for an exciting dividend investing video. Welcome to PPC Ian. This is dividend stock investing for everyone. All right, everyone. So right now in segment 1, I want to go through XYLD. This is a covered call ETF. Basically what they do is they buy the S&P 500, they write covered calls against it, and it yields a staggering 9.8% distribution yield. This is treated as ordinary income to my understanding from a trailing 12 months basis. So let's check out the stats. Look on the screen right now. And as you can see, I purchased my first units of XYLD on August 2nd. This was Monday this week. I got in at $49.06. And basically, this is from the fund family Global X. I recently did a huge video on different covered call ETFs. This was probably my favorite one, hence it's the first one that I purchased. And the expense ratio is 0.6%. And what's worth noting on this thing is the max drawdown is about 33%. So when I look back a few years, during that 2020 horrible downturn during the pandemic, and I look at kind of the peak to the valley of that stock chart that you see on the screen right now, that max drawdown is about 33%. Now, the way I look at this is it gets de-risked over time, because if you look at really long periods of time, it tends to go back to the trend line, up and to the right, basically flat, but slightly up and to the right. And I did a distribution analysis. If you look at the column in the middle, if I look at the last 12 months of distributions, I add them up, and then I divide by the purchase price that I paid, the trailing 12-month distribution yield is 9.82%. And so what I look at, the way I look at something like this is basically, if I go ahead and experience a really bad event, like the event that happened during the pandemic, and this thing drops 33%, and let's say it doesn't even spike back, it stays down 33%, that's about 3.36 years of distributions. And so that's kind of how I look at it. And for anyone out there investing in covered call ETFs like I am, I'm using it for intermediate term cash. This is cash that I'm probably going to need about a year from now, maybe more, maybe less. And so I'm using it for cash management. But the way I look at it is over time, it gets de-risked the longer I hold, because the more distributions I've received, the more yields I've received. That acts, in my opinion, as a buffer to any max drawdown that we may see in future market collapses. And so that's XYLD. I don't need to go into too much detail, because I did not one, but 2 videos on covered call ETFs and other similar investment vehicles. And I will link to both of those in the description below and in the pinned comment below. So let me know in the comments below what you think about XYLD. The reason I went for this one versus QYLD is I don't like over the long term how QYLD has had some of the equity kind of depreciate over time. The underlying asset, it has trended down over long periods of time, whereas XYLD over long periods of time, it has trended flat to slightly up. And it comes with a lower yield, a lower distribution yield, but I like that better. I don't like the fact that QYLD, the NASDAQ equivalent from Global X fund family, has the equity eroding over time. And so that's why I went with XYLD. Now, what's interesting is one subscriber mentioned to me, Ian, there's another one called XYLG that does owns the S&P, but only does covered calls against like half of it. And so that's one for investors on the channel who might want some income from a covered call strategy, but also want some of that upside appreciation with the S&P over time. So shout out to my homie who sent that information into me on social media. I think it was in a YouTube comment. I really appreciate that, and I thought that was really cool. Now, I want to get into, you already saw it on the screen, so I'm going to get into a little bit of my strategy right now, what I'm doing right now, and then after the interview with Mike, I'm going to get into more of the why behind it. But check it out on the screen right now. And so going forward right now, a big part of my strategy is I'm going to be turning off a lot of my dividend reinvestment. Not all of my dividend reinvestment, but a lot of it. I'm going to keep it on for some of my core positions that I just can't turn it off. I'm going to be focused on adding more money weekly to vehicles like XYLD for that intermediate term cash flow. I look at it as intermediate terms cash. I'm going to be adding more money to USDC, GUSD. These are stable coins, which also earn XYLD-like returns. I'm going to be just saving money in cash. I'm going to look at other alternatives too, like JEPI, for example. I'm going to be buying some dividend stocks, but it's mainly going to be dividend stocks that are on sale and at great values. And one that I just covered, for example, on my Patreon, check it out in the pinned comment below. I just did a Patreon video. I filmed it literally right before this one on Clorox. I don't look at Clorox right now as a deep discount stock, but that being said, I believe Clorox is going to trend down over time and then probably trend back up. And so I think there will be buying opportunities ahead for Clorox. And so I'm still going to be picking up dividend stocks here and there that I think are on sale. But my strategy is starting to change. I'm starting to focus more on generating cash, looking at intermediate term cash flow, and just saving up cash that can be used. And I want to talk about that at the end of the video today, why I'm doing this and why my strategy is changing a little bit. But before we do that, to leave you all guessing, I want to first get into the second segment of the video today. So I want to turn it over to Mike the Investor. Mike is one of my friends. He is a fabulous crypto investor. He has one of my favorite YouTube channels. I link to his channel in the pinned comment below. And I have a fabulous interview with Mike that we filmed just this morning. And I'm so grateful to have him here on the channel. And so without further ado, Mike the Investor. All right, everyone, I have a really exciting guest interview with me today. This is Mike the Investor. He has a YouTube channel, which I will link to in the pinned comment below, called Mike the Investor. He has one of my favorite YouTube channels. And I actually just had the opportunity to do a guest interview on Mike's channel as well. And so I'm so happy to have him here today with all of us, bringing a wealth of knowledge. Mike, welcome to the channel.
And it is a pleasure being on the channel. So I want to say thanks for having me.
Absolutely, my friend. And so I'm thinking we're going to go through a lot of topics today, everyone, that span Mike's life, what YouTube means to him, and how he is now doing YouTube full time. We're going to talk about some dividend stocks. We're also going to touch on crypto as well, and high yield stablecoins in crypto. So I just wanted to start off, Mike, where are you from and what are you all about?
Yeah. So I'm from the Midwest. I'm from Illinois. So been here pretty much all my life. Been traveled a lot of places. Haven't been out of the country too much. My wife and I, we've been to the Bahamas, but been married going on 8 years. So we're also high school sweethearts. So we was together in high school as well. So we have a very long track history, which is really good. And so a little bit about me besides the normal lifestyle. I do martial arts in my free time besides, investing, besides YouTube as well. I enjoy UFC, watching, fights and stuff like that. I'm a big basketball fan as well. So that's just a little bit about me besides the whole seriousness, right?
Yeah, that's great. Wow, and congratulations on your 8 years. That is wonderful. And how did you get started on YouTube? What was that like? What kind of was the reason that you decided to start making videos on YouTube about investing?
Yeah, so the reason why I first started, it all started from first wanting to document my personal journey in investing. And so it kind of turned into something bigger than myself, because at first it was just hey, I'm going to share my journey, my mistakes for anyone that's new like me that can maybe learn from what I'm doing, right? And so that was the mindset of it. And then it turned into getting feedback, to me looking at this as in this can actually be a business. This can open up more doors than just YouTube, which what it's been able to do for me so far. And so from there, it turned into starting to put out more strategic content, being more meaningful with the content, and actually looking to take it to the next level. And so it all started from just documenting my journey. And then I realized I can help a lot more people by just sharing and talking about other things. And so that's what it turned into.
That's awesome. And I've seen that myself. Is we just had a PPCE and meetup in Los Angeles. Thank you to everyone who decided to attend. It was such an overwhelming amount of support there. And it's such a community. And I would say that's the thing I love the most about YouTube is the community and investors uplifting other investors and sharing all of our best ideas out there on YouTube. And with that, I would be curious, what is your style of investing, and how has your style of investing evolved over the years?
Yeah. So first and foremost, I got investing in 2019 in April, and then started the YouTube channel June of 2019. So I started it a few months after I started my investing journey, which was starting the documenting part. And so my style was I wanted to invest for cash flow. I wanted to invest for passive income, which kind of brings me to some of the reasons why I started investing in the first place. I wanted to take control of my finances, take control of my family's finances. I also wanted to live a better life. I also wanted to retire early. And so these are things I wanted to do. And I knew with investing, it was possible. And so that's how it all started for me.
That's great. And with the cash flow investing, is it the automation of income that drew you to it the most? Is it the fact that you could literally retire early? Or was it the stability of it all, kind of the predictability? What were some of the things about cash flow investing that excited you the most about that style of investing?
Yeah. And honestly, it was both things you said. It was the predictability and the stability, because I know with dividend stocks, and if you're talking dividend kings, dividend aristocrats, and companies that have that stability, they're known to pay cash flow even through hard times. And they've shown to perform better, during hard times. And so that was one thing that really drew me, because I was a big fan of Warren Buffett, still is. And one of the famous sayings for, people who have made success and who have been able to make money passively is say, hey, you have to make money while you sleep. And so with dividend investing, or with assets that you can use like that, far as stable coins, far as cryptos you can hold to pay you for just holding them, that intrigued me so much, because I knew there were people that were living off of assets like that, like dividends. Like for yourself, you're paying bills now passively from income that you are able to, grow yourself over the years. And so that truly, truly intrigued me, from knowing I had the ability to do that myself.
Absolutely. Yeah, that makes a lot of sense. And so when you started, how did you first hear about passive income? Was it on YouTube? Was it by reading books? Was it just hearing about like Warren Buffett's strategy? What were some of what was kind of that aha moment, if you will, that kind of got you into that passive income investing?
Well, before I actually pulled the trigger on getting into investing, I was terrified. I was nervous, because I was like, man, I don't know what to do. And I heard about it from, watching movies, listening to podcasts, watching different type of educational videos, and just hearing from it from different circles of life, from talking to people who have success. And so I was always nervous. People was like, hey, Mike, just try it out, get into investing. And then as I got into more in YouTube in 2018, 2019, I started looking up ways to make money, and investing in stocks kind of came across. And I was like, man, why does this keep coming across? I just need to go for it. And I guess I just had I don't know. I think I wasn't ready when stocks came my way, investing came my way. And I think as I got more mature, just as a whole, as a person, it made more sense for me to go for it. And so I think that's what kind of made that aha moment for me.
Okay. And I think there's a good takeaway there for everyone. I found this myself in life. Sometimes you just have to take that first step, and then the strategy will start evolving from there. But if you don't start investing, it's kind of difficult to adjust and find that exact strategy that's going to resonate with you out there. And I know everyone in our community, like PPCE, and generally speaking, enjoy investing for dividends, but we've got tech stock investors too, index fund investors. And I think everyone has more or less found their unique strategy that works for them. But what I've found, at least in my own life, is it's that trial and error. It's taking that first step. It's getting started with investing that really sets that trajectory in motion.
I agree 100%.
And so I would be curious then, so you started passive income investing. What were some of the first steps that you took? Because I know in the earlier days of your YouTube channel, and again, everyone, if you're not subscribed to this man, make sure to do so. I will have a link in the pinned comment. Again, he is one of the most motivating, amazing channels on YouTube, and his subscribers have just been going through the roof for good reason. I'd be curious. I know like the early days when I was following your channel, and it's evolved over time, but there was more of a dividend focused. And so I'm assuming when you first started investing for passive income, it was well, please describe your approach for me. I'm assuming it was dividend stock focused.
Yes. And I would say I shifted very quickly. And so the very first stock I still remember that I invested in was a penny stock. And that's, you know, most people, and it was Pier 1. I still remember it like it was yesterday.
Interesting.
Right. And I didn't invest like a lot of money or anything into it, but I was under the mindset, as in not knowing a lot, as in, hey, if I can buy this cheap company for this amount and get so many shares, I can get rich this fast. Right. And so that was just my mindset. And so as I started to think, I was like, well, the only way I can make money from this asset is I have to sell it. Which creates another tax event. And so I was like, how do people make money from companies by holding them? And so then I started researching, and it said dividends. I said, okay. So then I started looking into dividends. Then I started understanding, well, just because a company pays a dividend doesn't always make that the best investment. And so I started looking at, okay, what criteria should I go by to look at what companies? And that's when I heard about Dividend Aristocrats, Dividend Kings. And I started understanding how Warren Buffett made so much money from Coca-Cola and other assets just by holding them. And so I was like, and how long have these companies been paying? 25 plus years, 50 plus years. And I said, that makes sense. This is how people are able to live off of companies. And so that's what started intriguing me. And so then I started to look at, okay, companies. I started to read books to educate myself on the space, on earnings, on things that are good and bad with companies, right? And so also, I wanted to kind of look at companies that could potentially give you a little capital appreciation. So that way you have the cash flow with the capital appreciation, which is always great, right? Because dividend stocks don't grow as much as a full growth stock. And so that it all depends on your investing. And so I wanted to educate myself on, if I'm going to slowly focus my strategy in investing in cash flow, how do I get the best out of it? And so that's how it kind of started. I started reading books, started looking at articles, going to websites, looking at companies' websites, looking at earnings, looking at how long they've been paying a dividend, how to calculate dividends, how to understand the yield, stocks, what was my goal. So everything just started to come together. And kind of like what you said earlier, once you take that step and you've been doing it for a little while, it doesn't take long to create a habit. And so once you start doing something for a while, your mind starts to turn, and then things just started coming together for me there.
Wow, that's there's a lot there. That's really interesting information. I think the last thing you said really resonated with me, habit. That's something I've been thinking about a lot lately. And I think habits are so important in life and investing. And it seems that once you start a habit, and it's easier and easier to maintain the habit and put one foot before the other, as one of my subscribers was telling me. It's just like running a marathon, one foot after the other. You don't even need to necessarily look at the goal every day, but just keep moving forward. And so that was one thing I unpacked from there. Another one was just these lists. Anyone just starting out with stocks, starting out with dividends, or a seasoned investor too, why not just look at those lists of the Dividend Aristocrats, Dividend Kings? I think that is so valuable, because why not just filter in on some of the best companies to start out with? The other thing that I thought was really interesting is I too had a penny stock experience in my really early days of investing. I think we all go through that at one point or another. Yeah. And hopefully our YouTube channels, yours and mine, help some people out there avoid some of these mistakes as well. But
Yes.
I too understand the penny stock side of things and the allure of that, and why over the years I've now created good habits that keep me away from that type of investing. Last thing I'll unpack, and this is a fun fact for all of you. In my really early days of my YouTube channel, you'll know I have some reviews of like MentorBox, and I even spoke on MentorBox on their platform. And some of you may know, but the people behind MentorBox is like Ty Lopez and Alex Mayer, some really big social media influencers. And what's so interesting is you mentioned Pier 1. Fun fact is, my understanding is that Alex Mayer and Ty Lopez, they're going out now and they're buying some of those older brands, and that just didn't quite make that step into e-commerce properly. And they're buying them at very good prices, and they're revamping these brands and bringing them into the digital age. And so my understanding is actually, I read some articles, Pier 1 was one of those companies. And so it's so
That's
interesting.
funny.
You may see Pier 1 facing a resurgence of growth now that kind of all of the digital marketers and technology people are starting to look at that brand again and take it online. So it was funny and interesting you mentioned that brand.
Yeah, I did not know that. I was not aware.
Yeah. It's interesting to see what they're doing these days, and so for sure. Now let's see. I have a lot more questions, and so dividend stocks. So you got started with dividend stocks. What were some of your favorites at the time, or do you still have some favorite dividend stocks? Are there any particular sectors or any particular companies that you like the most?
Yeah, so I really liked Coca-Cola. Was a big fan. I was a fan of Starbucks, and some of these stocks as well are more of it was more of a growth stock as well. Like I really love Microsoft, big fan of Apple. I liked IBM as well. So I mean, for me, there were some of the companies I held, I was very conservative. So my yield wasn't extremely big. I think I had like maybe a 3% yield overall, which was extremely conservative. And so for me, if I was going to invest for a long period of time, I didn't want to have a yield too high of a yield for that risk. And so as education grows, you start to add a little bit more risk to your plate. And so that's what kind of as well led me into going all into crypto and other things like that. And so
yeah, and I think and that's a good transition here. So one of the things I think Mike mentioned that is important is a lot of newer investors, they go for just high yield. Let's get the stock that pays the highest dividend. And sometimes, unfortunately, those are the companies that aren't growing as quickly. Now, there are exceptions from time to time. I think AbbVie was one of those exceptions where basically it was trading at a very low valuation, had very high yield, and it's growing all right. And so there are exceptions time to time, but I am the same way, Mike, with my dividend stocks. I do like to kind of target a sweet spot of about a 3% yield, because you know you're going to get a combination of company growth, dividend growth, and long term, it should optimize the cash flow.
Yes, I agree.
And so now and I agree, by the way, with your favorite stocks, or some favorite dividend stocks. Those make a lot of sense. Now, you just mentioned something that I think is going to be very interesting for this audience. This is someone who kind of had a crash course in investing really quickly, and just developed as an investor by just taking it on and reading the books, doing the work, testing it out, making mistakes, having successes as well. And your strategy from 2019 through 2021, it has evolved. And so I had heard recently that you're basically moving forward from dividends and taking on crypto with most of your assets. And so what's that all about? Have you completely exited dividend stocks and now you're 100% crypto, or are you leaving what you have in dividends and putting all of your new capital in crypto? How are you looking at that?
Great question, and great question. And so first and foremost, I want to say for people that's only in the stock market, this is by no means financial advice. This was just something as an individual investor that I felt I could do and wanted to be grow my wealth faster. And so with me being 29 years old, in a perfect world, we have more time on our hands, meaning you can take a little bit more risk if you choose to. Now, for me, with my education, with understanding where the world is going, I truly believe that crypto's the future. Now, granted, not all cryptos will make it. Most of them won't make it. But based off of my education, I believe I have a pretty good grasp on the cryptos I hold. That's just me. Of course, I'm going to be biased because I hold those assets. Mm-hmm. And so for me, I saw that I could not only get capital appreciation, but I could also get cash flow, passive income at the same time. Is it more riskier? Yes. Now, I will say this in two different kind of lenses. It's more riskier because the stock market has been here a lot longer than crypto. Yes, but there's also ways to completely, limit the risk a nice amount, like if you're using a stablecoin on a centralized exchange. These are ways to dramatically limit your risk while still being able to make passive income. Now, you don't get the capital appreciation with that, but there are cryptos out here that have big financial backing that has shown to be here when the smoke clears, that you're able to make passive income on. And so if crypto's the future, we know if you're holding for a long period of time, even if it's just 5 years and you're investing now, there is so much money that is going to come into crypto, so much wealth that is going to come into crypto, that is going to transpire to the cryptos that are going to be here. And a lot of those, pretty much every crypto nowadays, you can earn passive income on if you know what you're doing. And so with that being said, you have the ability to earn passive income and leverage your wealth at the same time. Extremely faster. Now, some people may say that's a quick get rich scheme. I disagree because I'm not banking on it to get rich. I'm banking on it to shortcut my wealth because, of course, dividends take a lot longer. Is it safer? But those are the pros and cons, between both investments. And I still think dividend investing is a great way. And honestly, you never know. I may jump back into dividend investing. You never know. You know what I mean? Because I still think it's a lucrative way to grow passive income and to live off of. But at the same time, when I understand the new wave that we are in right now and how much we are on the ground floor, I would be crazy not to take advantage. And that's just me personally. And
so are you 100% crypto, more or less at this point?
Yes, I am 100% crypto.
Yeah. Yes. Yeah. And what's interesting about crypto, and I may be off by a few $100 billion or something, but my understanding is the overall market cap is around 2 trillion. Is that right, Mike? Somewhere around there, 2 trillion, right?
Yes. It's last time I looked today, it was like 1.6, give or take.
Oh, so even lower. Okay. And so what's interesting is the market capitalization of one of the stocks you just mentioned, Apple, which is one of my favorite dividend stocks, is 2.5 trillion, something like that. And so all of the cryptocurrencies that exist, not just Bitcoin, but all of them, Ethereum, the stable coins, everything, it's the aggregate value is less than the aggregate value of Apple, which is one company. And so that's kind of what puts it into perspective with me that we're really new to this. This is the market is developing. And I remember when Bitcoin's market cap was like 30 billion, but at the same time, we're still pretty small here. And so it's exciting. We're really in kind of the Wild West, the early days, if you will, of cryptocurrency.
Yes, I would agree.
Yeah. And so when I'm going to step forward a little bit and kind of dissect your crypto strategy here a little bit, because I think this is going to be very interesting. A lot of folks on this channel know also that I invest in crypto. It's a smaller percentage of my portfolio, but I do it. And I believe in a lot of the same philosophies that you do. What is your end goal? Like, let's just look out, say 10 years from now, we're in 2031. What are you trying to achieve with your portfolio of crypto assets by that time?
Yes. So I will say this. In the next, if we're talking just 10 years with the cryptos I hold and the amount I hold far as quantity, I expect to be well over a millionaire.
Yeah. Absolutely.
That's my take. So for me, though, I'm also investing in cryptos that have that capital appreciation where I don't have to sell them to make it. So I can just earn the yield on how much has grown, right? And so for me, it's to build another security blanket to live off of if need be, because I'm not using any of my investments to live off of now. Right.
Absolutely.
And so for me, is to just continue to keep, and that's why my mindset is always long term. I'm not panicking because I understand what I hold. We're so new to this, right? We're so early. And so the people right now that's investing, and I think you've been investing since 2017, you can see that these are cycles that come and go. And so in the next few years, people that's investing now going to be telling people like you, hey, just be patient. Things will go back up. And they're going to be the same people saying it that's investing right now. And so that's kind of how I feel about it, man.
Yeah, agreed. I do agree. And that is something for the audience to be aware of. There's a lot of volatility with these assets, a lot more than dividend stocks. And that's one of the reasons at my age, I'm a bit older than Mike. I am at a point in my life where I can't shoulder quite as much risk. There's just would not be enough years to earn it back if there were some wild fluctuations. And so for me, it makes sense to be mostly dividend stocks with some crypto, but I'm really thankful for the exposure I do have. But I think, yeah, in future years, we're kind of looking back, we'll probably be telling investors exactly that, yeah, we went through the volatility, but it certainly paid off. And I'd be curious, like in about 10 years time, do you expect that you'll be selling off crypto assets to live, or is it more that you're looking to live off of passive income that you can generate from the crypto assets?
Yes, great question. And honestly, the same approach that I had with dividends is very much of the same approach I use with cryptos, because I don't want to sell them. Like, for example, I'm just going to shout out one coin that me and you both hold, VGX.
Yeah.
I believe the token has so much potential. And in a perfect world, I think the price is going to be crazy. Not going to give any prices out there, but I just think it's going to be crazy. And when we add the passive income ability in there, I'm honestly not looking to sell this crypto asset at all. I'm just looking to use the passive income to grow that position more, or to use that to grow another position that I feel where I see fit. And so that's what I'm doing with it. And I believe over time, that position within itself, people will be able to live off of. I've seen positions where people already have $1 million in value in VGX, and look at the price. I mean, I've seen it personally. They DM me, hey, Mike, just wanted you to know that, like seriously. And I mean, it's inspiring. It's a priceless feeling to see the community so strong and to see how early we are when you can see the handwriting on the wall. It's almost like you have a cheat code for the game. You just have to be patient.
Yeah, I like what you just said, cheat code. I think we'll get into this maybe a little bit more later, but I agree, I'll save that thought. I really do agree that in many ways, crypto, especially for younger generations, especially for people who do have some time on their hands, who can shoulder some volatility, it's a cheat code of sorts. And so I'm going to write that down. Actually, I want to get into that more later. But one thing I want to get into first is just kind of the basics. Dividend stocks, people watching the channel generally understand how they work. We invest in companies, and the companies are world-class companies like Coca-Cola, one of my favorites as well. And they tend to do well. Good economies, bad economies, they earn a profit. And a portion of the profit that they earn, they earmark it, they save it for investors, and they pay it back to the investors in the form of a dividend. And so that's how we receive dividends. It's through company profits. And when the profits are going up, they tend to increase the dividends. And even with a dividend aristocrat, the dividends will, even in bad times, they'll generally find a way to increase that dividend, even if it's just a little bit. But that's through profits that the companies earn. Now, with crypto assets, it's a little bit different, and there are so many different types of crypto assets. But I want to talk about some of the big ones that people have generally heard of. Just to use as an example, Bitcoin. Bitcoin is basically digital gold. It's considered generally like a commodity, a digital commodity of sorts. And so you can earn passive income on Bitcoin, but it's not necessarily Bitcoin is like a company or anything that's earning a profit that they're paying out. The passive income, it's a little bit different. And I was wondering, Mike, if you could kind of explain for the audience just how do these crypto assets pay investors passive income, and how could an investor even go about earning passive income on a crypto asset?
Yeah. So I'm gonna try to break it down as simple as possible. So first and foremost, there's two main layers to blockchain. You have proof of work, whereas you mine the cryptocurrency and you can earn passive income that way.
Hmm.
And then number two, you have proof of stake, where pretty much you lock up your cryptocurrencies to earn a percentage, to earn a yield. And so when it comes to proof of stake, there's a couple different ways, because you have ways where you can earn interest on centralized exchanges, and then you have ways where you can actually lock up the crypto yourself and actually earn yield on it. And so it just kind of depends on what way you want to do it, because if you're counting on a company, then right now you're not owning the private keys, or you're leaving your private keys on the exchange, which you have to be aware of. And that's why it's good to use companies you trust. And so if you're using a autonomous exchange or a DeFi exchange where you're using to stake it, you have full control. And so it just depends on kind of the investor. And so typically, if you're using the exchange to make passive income, they're actually doing the staking for you, but they're paying you a percentage whatever that percentage is for that crypto. They're paying you that based off of the staking percentage that they're getting. Or of course, if you're staking it yourself, however much you're staking, the same with dividends. Let's say the percentage is 5%. Well, however much you're staking, it's going to come out to that, how frequently they're paying. And so that's kind of how it works in simplest terms.
Yeah. So just to summarize, with proof of stake, basically there are coins out there that you are literally staking, meaning you're just placing them in a wallet or an account, an address of some sort. And by staking it, you're securing the network, the security of the network. And in
Absolutely.
return for that, the network's going to pay you some interest, some coins. And so
that is correct.
And then the proof of work, it's a little bit different. Those are networks like Bitcoin that are, you have miners that are performing advanced algorithms that use a lot of energy to secure the network. And so those networks, the miners earn a fee. I think when transactions are going through, there's some kind of, and they're uncovering coins as well. When they do those algorithms, if they're the first one to solve it, they'll get rewarded with coins. So far that's correct, Mike?
Yes,
okay.
That's correct.
But what's interesting is you can also earn interest on Bitcoin. And so I'd be curious, do you know how that works? I have some thoughts myself, but I'd be curious your perspective. How are people out there, even in a proof of work coin, even for people who aren't mining it, you can still earn interest on that coin? How does that work?
Yeah, so that will come from, the easiest way is to use a centralized exchange like Voyager or BlockFi.
Yeah.
Where you can just hold Bitcoin and they're going to just pay you for holding it. Same way as a dividend stock. You hold it and they're going to pay you, right? You know what the percentage is. If it updates, you're going to know when it updates. So you're always going to know what percentage you're making based off of the value amount. Or there's other ways that's a little bit more technical for more educated people in this space. You can go into the DeFi space and you can use wrap Bitcoin, which wrap Bitcoin is the same value as Bitcoin, but it's a token representing the true value of Bitcoin. So now you can actually use it in the DeFi space. Now that gets a lot more technical, of course, but those are other ways you can stake it as well. But the easiest way to make it would just use a centralized exchange, let them pay you interest on it, and then you're good to go.
Absolutely. And my understanding, like an example of a centralized exchange would be like Voyager or BlockFi, as Mike just mentioned. And what's interesting is when you stake your Bitcoin there, it basically means you're just kind of storing it there. It's almost, you're looking at it as a savings account. You're placing it in the account and you're just going to let it sit there. And for doing that, in many ways, Voyager, BlockFi, they have some use of those assets while they're there, kind of like a traditional bank would, like an old school bank, if you just had a savings account. And so when you have a savings account with a traditional bank, my understanding is, you put the money in there and then they can lend it out for people doing like mortgage loans, and you can earn some interest that way. And so similarly on these platforms, when you stake your proof of work coin, they're sometimes lending it out on the back end, and that's how you can earn interest. To Mike, to your understanding, is that how you see it working as well?
Yes. And then when you have companies and big hedge funds and financial institutions who take out loans against Bitcoin, that locks up a certain amount of Bitcoin, which allows these institutions or financial platforms to pay out interest because they know they have a certain amount locked up in a stable coin. So that's another way how companies are able to pay interest on Bitcoin. Because you have, of
Absolutely.
course, the futures, the CME. So those are people that's betting on the price of Bitcoin, which is the same as options when it comes to stocks.
Absolutely. And so the reason we are getting kind of technical today in the interview is I want the community to understand there are a lot of parallels with dividend stocks, but it's also a little bit different in some ways in that dividends, it's company earned a profit, they're paying that out. Crypto, it's different whether you're dealing with proof of work or proof of stake, and there's a lot of different flavors of what's going on. Just like with dividend stocks, you have some companies that are like real estate investment trusts, you have some like ETFs that are doing covered calls like XYLD. So there's a lot of different flavors of that as well. But in general, with dividend stocks, companies making money, they're paying it out. Crypto is a little bit different in that you're staking coins and earning interest. So it's more like the banking model, in my opinion, at least. I'm just speaking for myself here, but I look at it more like a banking model. And there's different tax implications as well. Dividend stocks generally like qualified dividends, long-term capital gains in the United States. Staking, crypto staking, it's more of an interest model. You're earning interest like in a high yield savings account. So it's more of a ordinary income model on that front, but many
Yes,
parallels as well.
absolutely.
Yep,
Absolutely.
yep.
Well said.
Thank you. And yeah, thank you, Mike, for getting into all of the details there. And so you brought up something in that discussion that I want to get into really quickly because I get a lot of people commenting on it, mainly on the crypto channel. And so, but I want to bring it forth here as well. And for those that don't know who are watching, I have a crypto channel as well, but this is on my main dividend channel because we're talking about enough here about just personal finance, dividends, the future of finance. I think this is just the basics that investors should be starting to learn about, in my opinion, these days. You said something, Mike, about not your keys, not your coins. And I get this question a lot. There's like some people in the crypto industry that really believe you have to have full control of your public and private keys. Now, I know for myself and I know for you, we take a little bit of a different approach in that I have some assets held that way, but I also take a lot of pride in participating on exchanges like Voyager because I know it's easy to use and I can earn a lot of interest. And I feel personally that the exchange is very reputable. And so I'd be curious, like, do you have any thoughts for those people out there who I bet we'll find in the comments below about like not your keys, not your coins? Like, how do you look at that?
Yeah, and I think it's definitely a statement that needs to be known and solidified because, like you said, I take both approaches.
Yeah.
I have an extremely nice amount of crypto that I keep offline on my ledger, and then I also have some money I keep on Voyager and BlockFi that I'm earning interest on.
Mm-hmm.
But I'm not just using every exchange out there. I'm using ones that I feel are going to have solidified staying power. And I believe they're going to be able to keep paying these rates. Yeah. And so also I use what kind of resonates with me because I don't always think there's always like the fight between this platform is better than this platform. You know, I think there's always pros and cons to every platform. And I think it kind of resonates with that individual and investor, right? And so for me, I take the approach of keeping crypto offline. And you can still earn passive income as well in your ledger with certain cryptos, which I'm currently doing. And then you have the centralized way, which makes it a little bit easier to move around. And so it's more convenient, like you said, if you need to. So say you're staking, if you're using BlockFi or Voyager, it's not locking up your Bitcoin or whatever other cryptos you have. You're just leaving it there in the wallet and it's earning interest. Whereas if you want to, you can immediately sell it at any time, and then you have your profit or the value that you had in there. Whereas if you have your ledger, you know, there's a few extra steps that you have to do if you want to utilize that money, you know, into fiat or whichever.
Yeah. And so that was yet another flavor that I found. It was kind of an interesting point in time for me that I learned from Mike's channel. And I think For those of you who are interested, again, I'll point you that way in the pinned comment below. He has some videos on how you can even earn passive income without a centralized exchange. So even on a decentralized exchange as well, or decentralized manner, decentralized wallet, he has ways where you can earn passive income there as well. So make sure to check out Mike's channel for some of those insights, because my mind was kind of blown that, wow, is that the next evolution of all of this? It was really fascinating.
Yes, yes. And I believe you're talking about the DeFi space.
Yes. Yeah.
Yes. And I believe that DeFi is the new banking, because if we just talk about investing as a whole, when we look at us being able to take out loans from banks, financial institutions, them being able to give loans and pay these certain things, that's because there's a pool sitting somewhere to be able to be pulled from. Right. Yeah. And so in simplest terms, without being technical. And so when we look at the DeFi space, it is the same exact thing without a centralized authority controlling it. There is a certain amount of money that is locked, which is TVL, total value locked, that people are able to pull from. And this is how you get your loans now in crypto. This is how you're able to use collateral. And so I believe it's the new banking. And so when we look at the largest digital asset holder in Grayscale, parent company is Digital Currency Group, back in February, I believe they announced this year, they created a DeFi fund. Yeah. Well, that goes to show, if the largest digital asset manager in the world is creating a separate fund just for DeFi, that tells you maybe they know some we don't know. That tells you that DeFi is here to stay. Just throwing that out there.
Absolutely. And so that's kind of, honestly, for the audience, that's probably the next evolution on my journey at some point, is I want to see, like, what is it like on one of these DeFi exchanges like Compound, or another one with lending out coins and earning interest there. There's that whole world. And I'll tell you, one of the reasons I created my crypto channel is kind of like the reason Mike started on YouTube back in the day, is just to share my journey. And one of the messages I like to share with anyone watching is, if you are watching the channel, generally, there are some people in the community that are fully financially free and they're just living the good life. But a lot of us, we're still working. We're still kind of getting towards that goal of that full financial freedom. And I really do believe that whether you take a big position in crypto or a really small one, it is a space that is the future. And so anyone in like the business world, it's probably a good idea just to learn some of these skills and to get that education, because that is where things are going, and to stay ahead of the technology. And that's one of the reasons I really enjoy Mike's channel so much, is it helps me continue to further my own education. So I do look forward in the future, just to, now that I've done some of the just crypto staking, and I've done some of the basics, looking into testing out some of the DeFi stuff. I don't know if I'm going to be a huge consumer of it right away, but at least it's an important step in furthering my education.
Absolutely. And I think that's well said, because one thing that investors, and I've learned to know from watching you when I was just getting started in stock investing, was you were very tolerant on your risk tolerance. Mm-hmm. You were very sensitive on what you did, what you were invested in, and if you did take a little risk, why you thought this was a good risk. And so I definitely admire that about you, Ian.
Oh, I appreciate that, Mike. Thank you. And here's an interesting question for you. I bought some Coinbase stock recently. I'd be curious, like, as a crypto investor, are you just on the crypto assets, or would you consider taking positions in the crypto space through companies as well, like buying? I know Voyager, for example, is a publicly traded company as well. And shout out to my friend Daniel. He's a member of our community. I know he's big on Mike's community as well, another crypto investor, and he's, I believe, taken a position in Voyager. I'd be curious, like, would you consider participating in the crypto space that way?
Yes. And I also think it's a lucrative way as well to see some really nice capital appreciations. Because if you just look at a few stocks, granted, I'm not invested in the stock world, but I still keep my ear, at least to the stock world a little bit, to Wall Street. And so if you just look at Riot, for example, ticker symbol RIOT. If you look at where they were like 4 or 5 months ago, and then you look at the price now, that's all due to Bitcoin and crypto adoption. So there are crypto companies, or I should say blockchain companies, or companies that are now investing into this space that can give you exposure without giving you that full volatility risk to crypto if you're not ready for it. So I definitely think it's a lucrative way to get into that space.
Absolutely. I think another one is like NVIDIA. A lot of investors have gone into that company because their graphics chips are being used for proof of work mining. And so that's kind of just another way as well. And so there are ways for more traditional investors to get involved in crypto if you don't want to buy the crypto directly. From your research standpoint, how do you go about following the money?
Yeah. So how I go about following the money is, first things first, and I kind of just made a video on it as well. We have to identify who is smart money, who is big money, right? Because before we can follow anything, we have to understand who and what we're following. And so once we understand that smart money is hedge funds, financial institutions, central banks, all of these big players, even certain Fortune 500 companies who have the ability to move the market, such as Tesla, when they bought Bitcoin, we've seen what that did for the market. So when you look at smart money, you start to look at who they're investing in, what blockchains are they choosing to integrate things on. So if we look at Visa, for example, they've chosen USDC stablecoin, which is the second largest stablecoin behind Tether. And so when you look at them choosing 4 major blockchains so far to implement USDC payments, that kind of tells you where certain money is going. Visa is the largest player in payment processing. They have the most market share behind MasterCard, American Express, Citibank, the list goes on. And so when you look at where these big institution players is putting their money, who they're integrating with, and sometimes you really have to dig to see, because sometimes there's a connection there, but you won't see it until they put it publicly, unless you're really digging. And so that's how I do it. I follow who I see the partners is with. And I think also, as you start to think like this, I should say, you start to understand, okay, this company is connected with this company, also this company. So then you start to see connections. And so that's how I follow it.
I love this about Mike's process, because a lot of you following my channel, you've seen over the years that I like to go into the annual reports, the 10Ks. I like to go into the quarterly reports, the 10Qs. And I don't just look at the numbers at the top, but I start looking for footnotes, and I start getting into like page 100 of the report or page 200 and looking for little details. And I noticed this on Mike's channel as well. If you head on over, he likes to do this on his crypto assets. So this is someone who's taken a very similar approach to, I would say, the my style, the Warren Buffett style, the Peter Lynch style, someone who's not trading, someone who's not just going on, hey, this is what everyone else is investing in, but really looking into the details, really following the trends, really looking in the fine print and making these connections. And so I thought that was really unique about your approach. And it just goes to show that when you've developed an investment strategy, a fundamental investment strategy, it can actually be applied to the crypto space as well. It's not just for stocks if you want it to be.
I agree. And honestly, that's what made my transition so much easier, because I already had that basic foundation in the stock world. So it was just now understanding the new asset class, crypto. Why is it here? What problem is it solving? What solutions is it going to give? And so that's how it started.
Yeah. So I want to go into one more thing, and then I have some higher level questions. So we mentioned stable coins a few times. Mike, what are stable coins? Do you invest in stable coins? They have an opportunity to offer investors really high dividend yields, or I would say interest rates. It's not really dividend, it's interest. But it's very similar, I would say, to like dividend investors who choose these covered call ETFs like XYLD or QYLD that pay these really high dividends distributions, which is also, I believe, mostly ordinary income. I'd be curious, do you participate in these stable coins? Are they part of your strategy?
Absolutely. It's a great way to lock in profit. And it's also a good way to keep a certain amount of value while growing your value. And so that's a great way that I like. It's because, yes, with dividend stocks, they don't grow as much, but you also deal with it going down some as well. And so with stable coins, you get best of both worlds. You don't get the appreciation, but you don't get the decline. But you do get the ability to continue to keep building your income. And so passively, while not losing any value. So I definitely use stable coins. It's also a way, if you're selling out of a crypto and you have a few extra steps, I would highly recommend to convert it into a stable coin to lock in those profits, because a stable coin is a cryptocurrency that's pegged, pretty much to whatever fiat currency is back to, whereas the USDC is pegged to the US dollar. So it's pegged 1-to-1. So one USDC coin is going to be worth $1. And so in simplest terms, so first things first, you want to just make sure that you understand stable coins. There's a ton of them out there. I think USDC, me personally, is probably the safest, just being honest. And so that's the one I personally use.
That's great. Yeah, I'm a big fan of stable coins as well. And I look at it, for myself at least, as kind of a way to park intermediate term cash or even longer term cash reserves. It's a nice way to avoid your value of your cash eroding due to inflation. And they pay a very nice interest rate. It is, I believe, mostly ordinary income interest. But the interest rate, I think, on Voyager right now is at about 9%, something like that.
And with the booster, you can get 10%, which is crazy.
crazy interest rates. And it may not always be that high. I think it's because the market is new. I think as the market matures, those rates may go down over the long term, over the coming years or decades, or certainly over coming years. But, even for me, at least with stable coins, if they're yielding anything over 5%, for me, that's a much better alternative to any other traditional way of parking cash reserves. And so I'm a big fan of stable coins. I really enjoy that innovation in crypto. One thing I'm gonna pick your brain on, Mike, because it's something on my mind recently, and we're getting into a lot of technical stuff today, but I think it's good because I've got the expert on the show. What do you think about some of this SEC news? And I know, like, I noticed a few weeks ago, like New Jersey SEC said they were coming after one of the platforms, and they were saying, like, this interest-bearing account that you offer is basically needs to be regulated by securities law, and it was the stablecoin account. Or I think it also might have encapsulated some of the non-stable coins that also paid interest. I'm not sure. But basically, the company was kind of coming back and making the argument, well, we're going to work with the regulators, and that's a good thing that the regulators are getting interested in the space. And I think it's better to figure this stuff out sooner than later, and better to do it now at the beginning stages of the industry. But what they're arguing is, hey, no, these aren't securities, they're commodities, and so it's not regulated by securities, traditional like securities law. And so, and there's a lot of flavors of crypto. So there's certain cryptos, for example, where you can trade like fractional shares of like Alphabet stock via crypto coins. In my opinion, those are I don't want to get anyone in trouble, but I would generally say those are probably securities, because look, it's the underlying thing as a security. But I'm talking more like stable coins or Bitcoin. Do you have an opinion, Mike, or like on this kind of latest round of kind of regulators looking into the industry? And do you think that just how do you price that risk? Because for me, when I see something like that in the news, I have kind of an alarm bell go off in my mind, and I'm like, risk. That's why I only allocate a smaller percentage to crypto, because there's still risks. But with risks, there's still a lot of reward as well for those that take on risk and the industry gets past it. So I just be curious, what do you think about that stuff?
Yeah, so I look at it in two ways. I think regulation is good, and I also think regulation can be bad for a lot of cryptos, because when regulation fully sets in, we're going to really, really see what cryptos are here to stay. And so for me, I look at the SEC and how they're talking about stable coins and things like this. I look at this as them prepping the narrative to bring in regulation. And so for me, when people say, man, we don't know if crypto is going to be here yet, crypto is going to be here. The question is what cryptos are going to be here. And I think that comes with, you help answer that question with education. You help answer that question with who these big financial institutions are putting their money with. And so when we look at who's using the USDC coin, when we look at it growing to be soon to be the number one USDC coin, which I believe it's going to be. It's going to overtop Tether. I believe USDC is like 27 billion and Tether's like 65 billion market cap, give or take. USDC, I believe, will be the number one stable coin. That's just in my opinion. And I believe right now they're setting in regulation to take out all of the, I wouldn't say crappy coins, but to take out all of the coins that aren't going to be here, I guess, in so many terms. And so that's kind of how I look at the space, instead of looking at it, oh man, crypto is going to be gone.
Yeah.
This is the same game they played with the stock market. Think about the people who would have trusted their gut, who sold out early, who bought into Google, Amazon, Microsoft. You know what I mean? And so you've probably gotten early on some of those, or maybe even had some instances where you was like, man, why did I sell that company? You know, because you've been invested for 20 plus years, you know, so I would assume you have some experiences like that, right? And so when you look at that, of course, there's more risk. But if we go back to what you said, the highest the crypto market reached was 2.6 trillion. The stock market is almost 100 trillion. Well, the US stock market based stocks and bonds is over 55 trillion itself. So it's over half of the entire stock market. And when you look at coins being tokenized on the stock market, like you already just mentioned you're able to now buy stocks 24/7, 365, the same way as crypto with crypto. So now you can buy Google, Netflix, Amazon, Facebook. There's a few other Fortune 500 companies you can buy with crypto. And so that right there should tell you, and even with the market down, we've seen more adoption that's happened in the space with the market being on a decline. And so I just see the handwriting on the wall, and that's probably why I'm so calm.
I love that. And I think the key takeaway from that is the stock market has been around for a very long time. And so there's been a lot of time for the regulators to figure out all of the fine details. But crypto is so new that that's kind of the phase we're in now. I think the regulators, the governments around the world are all trying to figure out, well, how does this work, and how can it work with traditional rules? And I think some countries might outright ban it. Others who adopt it will probably really benefit from that decision, in my opinion, because it will bring innovation into those countries. But there's going to be some things to figure out here. And as you said, Mike, there's going to be some winners, there's going to be some losers. But I think with anything like that, with any kind of risk, there's also going to be opportunity. But I also think investors, depending on their risk tolerance, depending on where their stage in life, that really helps determine asset allocation as well, because there is risk there. And some people, you know, I'm a little bit older, don't want to take on quite as much risk. Other people are more comfortable with it. So I think those are all good points. And the other point I'd take from that, and I've seen this firsthand, is the amount of money. I'm not even talking about the market cap of the coins, but I'm talking about just venture capital going into this space. The people who are working in this space, some of the brightest minds in the world, some of the big companies, even the really big companies, traditional companies like Visa, you mentioned, who are getting into the space as well. I think you're going to have a lot of people, thought leaders from these companies, be able to work with the regulators, like high up executives at companies like Visa, probably regulators who might have questions or want to get to the bottom of it or want to come up with the right solution. What keeps me calm at night is that I know I've got the right team. I've got the right people working on these problems who are really sophisticated at doing so and have the right connections.
Yeah. And you know, one other quick thing, you know, I think we may see more regulation. Like, granted, we've seen more regulation for Bitcoin and Ethereum so far, and Bitcoin being accepted as legal tender with El Salvador. But we starting to see the regulation shift towards stable coins. And the reason why is because stable coins is the foundation of crypto. You got to have that balance. You got to have that stability. And so I believe we're starting to see the shift in that regulation for stable coins, is because as things are moving extremely fast, and it may not seem like it, as things are moving to crypto, we need an asset that we can use interchangeably that can hold its value. And I think that's why they're going towards the regulation for stablecoin, because this is the future. So they have to figure this thing out.
They know that's the future. That's what I'm so excited. I mean, my personal crypto strategy, it is these days, as I deploy more money, I'm really trying to put a bunch in stablecoin, just because I love that it gives me exposure to crypto, gives me the interest rate, but it's also pegged to the dollar, and so there's that security there, and I think a lot of or at least perceived security for my risk tolerance. There's still risks, but I think that's a very valid point. That's what's going to take crypto to the next level, is especially when traditional companies like Visa start integrating stable coins into their back end systems, and so it makes sense that the regulators would go there. So I want to go back to this concept I wrote down here earlier of cheat code. And so I look at dividend stocks as a cheat code, because what they allow me and other investors to do, brick by brick, is to build passive income. And one day that passive income can pay for living expenses so that the investor no longer has to work. And a lot of members of the community, they choose to retire early and live off of those dividends. Some are fortunate enough to do it right here in the US, where the cost of living is a little bit higher, or a lot higher in many cases. Some dividend investors find that, hey, I'm going to play geo arbitrage, and I'm going to go overseas, somewhere that's a little bit more affordable, but still offers great quality of life, and live off of my dividends. And I look at that as a cheat code, because without that, boy, the way things are these days, you might be working into your golden years. You might not even have a retirement. And I think it's also a cheat code because in general, there are going to be tax consequences and such, but a lot of dividend investors expect that they can pass down those assets to future generations. So future generations might be on a better footing than where they started out. And so it's kind of a generational looking out for your family in the future. And so it really is one of those hacks that I think is left for the ordinary investor. And it's something that everyone can do. Starting a small business, for example, everyone can try that. But I think what percentage of small businesses succeed? It's like
1%.
Oh, 1%. It's even lower than I thought. I thought
it's
it was like 5 or 10%.
It may be. I know it's extremely low.
It's low. And so a lot of people could go that route too and create a stream of passive income that way, especially if they delegate responsibilities to someone else. But anyways, I love this concept of cheat code. But what I also start realizing with dividends, like where I live, Bay Area, living off of dividends is difficult here. And I'm even starting to think, my family's starting to think, do we do geo arbitrage? We're starting to look into that. Okay. And so what I would say, though, is how high the stock market has come in recent years. It's a lot. And it certainly makes it more difficult for anyone to achieve financial freedom, whether it's dividend stocks, starting a small business, doing anything. It's difficult. The cost of real estate, cost of rents, gone through the roof. I'm sure, have you seen that at all, like in the greater like Chicago, Illinois area, like where things are getting a little more, there's just that inflation. Is real estate, like cost of living, going up there at all?
Real estate, food, I mean, everything.
Yes. And so I also start thinking about a lot of the older generations, especially if they participated in the stock market or in investments over the decades, they're doing all right. Those that did not participate in investments, not so good. But what I'm saying is, why I like crypto here is I almost think it's even more of a cheat code than dividend stocks. It contains a lot more risk. And so that's why I have a very balanced strategy, mostly dividends. And I'm fortunate enough to be in dividends a while. But I'd be curious if that plays into your crypto strategy. Is one of the I'd be curious just more about like your worldview about what's going on in the United States, in the world, with the wealth gap and with the cost of living, and just the dream kind of getting further away because the cost of living is so high, and real incomes, like job income adjusted for inflation, it hasn't kept up. And no. Does any of those like high level concepts play into your strategy, Mike?
Yes. And this is the reason why I don't want to just invest in cryptos just to sell them, because you truly have to depend on the market on what it's doing. Same way with the stock market. You know, if you're only investing in growth stocks, well, the only way to lock in those profits is by selling that stock.
Yeah.
And so with cryptos, when you have stable coins, or if you have cryptocurrencies that you bought pretty much at the ground floor, like me personally, people who bought Bitcoin extremely cheap, where you're probably one of those people. I'm not going to ask you where you bought in, but
well, I got lucky. I started buying around $3,800 in late 2018. I definitely did not buy as much as I should have, seeing where we've come. But I did get fortunate enough to get in a little, a little lower. But again, it wasn't like a huge pie or anything like that.
Right. And so in my opinion, though, even still at $3,800, and let's just say $4,000 to make it easy, even at $4,000, even with a huge dip, I would bet the bank that Bitcoin's not going back to $4,000. I don't. And so for me, when you have assets like that, that you're able to buy in so low, where you kind of have that stability where it won't go that low anymore, kind of like certain stocks, Apple, Johnson and Johnson, which is another favorite, Procter and Gamble, Coca-Cola, those certain stocks will only go so low because there's so many investors holding them for passive income. And so when you look at certain crypto assets that you're able to get in on the ground floor and they grow up dramatically with adoption, you kind of have that security blanket in a sense, whereas it's at a certain value. So you have a certain amount of money coming in if you're not talking about a stable coin. And so for me, I still have that same mindset as in investing for cash flow, because I want to create a security blanket. I want to be able to, if I want to not do anything, I want to be able to have that ability. If me and my wife want to take a year vacation, if we want, and live, I want to be able to do that. And with passive income that you truly don't have to work for, crypto and dividend stocks are able to do that. And that's why it's the cheat code.
Yeah, it's a cheat code. And with crypto, as Mike had explained, the opportunity, there's certainly more risk, but the opportunity for growth and for passive income, it could be even greater than dividend stocks here, because you're talking about a market that's just getting started, that's minuscule, that's smaller than all of them, smaller than Apple's market cap, versus talking about dividend stocks that have appreciated quite a bit already. And so there's kind of that dynamic as well. And that fascinates me about crypto. And what fascinates me about crypto too, not to get too political or anything, but I kind of see in our world, there's a kind of an old way of doing things and a new way. And I also feel like there's almost a battleground, if you will, in some ways, that crypto may be one of those really good opportunities. And again, I'm not offering advice or anything like that. We'll do the disclaimers at the end, but I just think for like certain investors, it really is an interesting asset class to look into as a hedge against this disparity and kind of this gap of wealth, and also just this accelerating cost of living that is really difficult to keep up with. You almost need to consider at least something like crypto as part of, in my opinion, at least that higher level kind of worldview that we just live in a very interesting world here in 2021 that's even different than when Mike was starting back in 2019.
Definitely different. I mean, extremely different. And a lot of it changed with education. A lot of it changed with understanding what my goals are. And I think this is a good thing as well, because I think some people think, well, if I write down a plan, I can't change it. No, write your plan down, which makes it easier to tweak along the way, because things will change. Like, say, for example, people who hold maybe certain stocks or certain cryptos who have a certain price target on where they want to take profits. Well, depending on what's happening in your life, you may have other things that's done exceptionally well for you, where now you may not need as much money from that asset. So now what you do is tweak that plan to where you may need to sell out at. And so these are things that I think is very important for investors, is have a plan at least, so you know what you're working towards, and then you can always make changes along the way.
Yeah, that's really wise, especially with crypto. It is something that I would say is a little bit easy to go too far into, or maybe take on too much risk. So even before the investor starts, just having a plan as well to put those kind of guardrails on the strategy. Mike, we've been going a while here, and so I want to be respectful of your time, but I have a few more questions. I want to take it a level up. We have a lot of people who watch here who are YouTubers, and
Yeah.
I'll give a shout out to Matt Money. He's a YouTuber who I know is interested in dividends, tech stocks, and crypto. Dapper Dividends too, another one who does dividend stocks, crypto. So we have a lot of folks watching who are YouTubers and they like dividend stocks and they like crypto. And so there's a bunch of us. And I'd be curious for those that aspire to be like a full-time YouTuber. I'd just be curious, like, what has that been like for you? Because you recently went, well, maybe not that recently anymore, like a few months ago, went full-time YouTube. Like, what was that like, and how did you make that decision to pursue that full-time career on YouTube?
Yeah, great question. And so first and foremost, before I even started YouTube, I was in a position where my wife and I, we didn't have really no debt like that. We prided ourselves on not having debt. And a few years before I got into investing, we took the whole Dave Ramsey course on getting out of debt snowball, and then we tweaked it to what made sense for us, right? And so that's kind of how first things started. First, we was in a position to be able to live a good life, but also live it minimalistically. And so for me, as I started growing with YouTube, YouTube started to open up more doors as well. And then income started to increase. And so my whole concept was, if you can find something you love doing, if you can find a way to allow this vehicle to make at least twice as much what you need to live off of, even if you hit a little bit of a rough patch, because you allowed it to make twice as much, you still have that security blanket. And so for me, I didn't have any debt completely, had no personal loans, no car payments. Everything was completely paid off. So living minimalistically, and also was doing extremely well. And then also I had some other things that's tied into YouTube as well that helps bring in income. So I do have a few streams of income where I'm not slowly depending on YouTube. Mm-hmm. But with that being said, YouTube by itself was still able to provide a living for me, not including the other streams of income. Wow. So with that being said, it gave me the confidence to kind of go ahead. And then kind of going back to what you said, when we say starting investing, sometimes you're not going to know everything. You just got to kind of take that step, and then you'll figure things out as you go. Because as a new entrepreneur myself, I don't have all the answers, so I'm definitely trying to soak up information that can help me be successful in the future.
So much good information there. And I think the backdrop is, I've seen this so many times, whether it's with dividend investors, index fund investors, now crypto investors, is embracing that minimalistic lifestyle, embracing cost control, embracing no debt, because that puts you on a platform that will allow for financial freedom so much quicker. And so just those basics, budgeting, money management, having a plan, talking to your significant other and making sure you're on the same page with finances. Absolutely. I think all of those basics, whether it's with crypto or anything else, it just sets anyone up for a better lifestyle. And I would say it's a lot easier said than done when you actually, these are, I guess, the basics, but sometimes, there's emotions that become involved. Sometimes, we're bombarded with so many advertisements out there that are trying to trick us to want to buy things. And so it's always a good reminder to hear that, and how that just those good financial habits set you up for success to pursue your dream. And I would say, now that you've moved from working in more of a corporate environment to doing YouTube full-time, would you say, looking back, are you happy with your decision? Is it what you expected? Were there any surprises along the way?
Yeah, I would definitely say happy with the decision, and definitely adjusting still. I've adjusted quite a bit and gotten to kind of a sweet spot as far as with content, because I've gotten to the point where now comfortably I can kind of make certain content in bulk, which allows me to now focus on other streams of income, which is kind of what I'm doing now. So I'm learning on how to make relevant content in bulk, because that's the thing when we're dealing with investing, we're dealing with so many numbers. And so if you make the content too far out, the numbers gets kind of screwy, right? And so we have to be careful when making certain investing content in bulk. And so what I've been trying to do is for me to free up time for myself to open up other things I want to get into, or that the community has said, hey, Mike, we want this. I have to free up time from content to be able to do that, because I'm still solo dolo. You know, I do all of my graphic arts, I do all of my editing, everything. And so for me, I really pride myself on the editing because I can control what comes out to the audience. And so that's one thing I really like about the editing feature. And so not that I don't trust anyone to outsource it, but when you're a content creator, you take that pride in what you've done. And so you really want to make sure your spin is put on it.
Absolutely. Well, everyone out there, I just want to say, please check out the pinned comment below. Make sure to check out Mike's channel. I think if we had unlimited time, I could probably keep this interview going another hour or so, but I do want to be respectful of Mike's time and as well. So please check out his channel, Mike the Investor. And Mike, thank you so much for being on the channel here. Again, I'm a huge fan. I enjoy watching your videos. In addition, just to providing insights on crypto, I love the motivational aspect. I think you're always a very positive person and communicate to your audience just that that right mindset, that mindset of being empowered and going towards their goals. And so, thank you again for sharing your time with the community today.
Hey, Ian, I really appreciate it, man. And we definitely have to do it again soon.
Absolutely. And that would be awesome. And everyone, by the way, if you haven't seen part one of all of this, I have, Mike has an interview of me over on his channel. So make sure to check that out. Now stick in there. After I say bye to Mike here, I will just have a quick closing section as well, where I go through some of the disclosures, disclaimers, and some other fun updates. But just before we do get to that, any of the stocks or cryptos that Mike or I mentioned today in terms of disclosure, we own them. And I would say also in terms of disclaimer, today's interview, it's not investment advice. It's just for fun and entertainment value. And so thank you everyone for tuning in. And thank you again to Mike. And I'll see you just in a minute in the closing segment.
All right. Thanks a lot, Ian.
All right, everyone. I really hope you enjoyed the video interview with Mike today. Again, if you want to check out Mike's channel, it is one of my favorite on YouTube. Check it out in the pinned comment below. And I really wanted to have Mike on the channel today, in the video today, for two particular reasons. One, we talked about the stablecoins, which I think are interesting vehicles for intermediate term cash savings, high yield cash savings accounts, if you will. And that's a big part of crypto. You heard in the interview that Mike believes stablecoins are basically the foundation of the crypto revolution. And I agree as well. I think they come with risk, of course, but I use them as a component of my intermediate term cash savings, and they provide huge yields just like XYLD. Now, before we leave today, I want to also talk about that big update that I was talking about earlier, all the way back in the intro. So shout out if you made it all the way to this point. By the way, if you enjoyed the video today, if you enjoyed the interview with Mike, if you enjoyed my intro, if you enjoyed the XYLD content, please go ahead and smash the like button. It truly means the world to me. It's the best way to share the video with others on YouTube, because the more likes it gets, I think the more just the word is going to get out there about the video. And please go ahead and subscribe, because I have so much more content on the way. It means the world to me. And again, check out my Patreon if you want to see my video all about Clorox and like 40 plus other bonus videos that you unlock instantly. You can cancel Patreon at any time. And I have so many investors from the community over there on Patreon. I'm truly grateful. But basically what I wanted to share in terms of big news is my wife and myself and our family, we're really starting to look at our options in terms of where we live. And we're really taking a hard look at moving out of California. And so this is a big radical change for us. And we're trying to decide, do we just move somewhere, buy a new place and sell the old place? Or do we move somewhere, buy a new place, keep the old place and rent it out? And so we're trying to work with our mortgage professional and understand all of those options. I don't want to tell you just yet where we're looking because it's so kind of early, but we're really excited about it. And we think it's going to offer a great opportunity for our family to kind of live that dream lifestyle, more suburban lifestyle that we've been looking for, and the kind of environment where we're really excited about for the future, for our kids, for our family. Nothing is written in stone yet. We're not 100% sure, but that's kind of the direction that we're actually starting to think about. And so when I get into these types of situations like we're in now, all I know is it's best to put the brakes a little bit on the investing. And this is the perfect time to use dividends for what they are meant for, and that is creating opportunity. And so I turn off most of my dividend reinvestment. I start putting cash into just cash, XYLD, Stablecoins, etc. And I start kind of building up that cash. So when the move does come up, we're kind of thinking about a year from now, maybe less, maybe more, we shall see. But having that buffer will mean the world to our financial picture, and it will also mean that it will not be necessary, most likely, to sell stocks, or if there are stocks sold, it might be a few ancillary positions here or there. But the goal at this point, and why I'm putting the brakes on dividend reinvestment, is to avoid having to do that. And yeah, so that's where we're at right now. And there's a number of things. Originally, we were thinking actually of relocating within California, but we're kind of getting to the point where we've been here a long time, and it's time for something new for both ourselves and also our family as well, and to start thinking about the kids' futures. And so put in the comments below, by the way, if you live outside of California, you want to see PPCE and move to your community, let me know if you'd like to see me there and where you live. Share that with the community, anywhere where there's a really great family quality of life and really good schools. All right, everyone, I hope you enjoyed the video today. In terms of a friendly disclaimer, today's video is not investment advice. I'm not a licensed investment advisor. Today's video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult your licensed financial advisor first. Just sharing my journey here on YouTube for fun and entertainment. It's possible to lose a lot of money in stocks and in crypto as well. And the disclosures go for Mike as well. He's just a guest here on the channel sharing his knowledge for fun and entertainment. Also, before I leave today, in terms of a full disclosure, I own all of the stocks and crypto assets mentioned today. There are too many to remember, so I'm going to name off a few of them here, but I'm going to share also the rest of them on the screen in front of you right now. I am long Clorox, ticker CLX, XYLD ETF, ticker XYLD. I'm long US dollar coin, USDC, Gemini coin, GUSD, Bitcoin, BTC, Apple, AAPL. I'm long Coca-Cola, ticker KO. I'm long Procter & Gamble, ticker PG. And again, all of those stocks that came up during the interview with Mike today, which I will have listed on the screen by now as I go through and edit the video today. I can't wait to see all of you in the comments below. Please share your love for the channel with a thumbs up, smash that like button. It really does mean the world to me. It helps this channel so much. I love you all, and I'll see you in the next video.